Okay, good morning everybody. Winding up this week, it's Friday, September 14th. We had two events this week, other than our normal releases, that being export sales on Thursday and our export inspections on Monday with crop progress. We had our USDA report come on out. And as we mentioned before, that we kind of thought that was a non-bearish event in the sense that what we saw as far as yield, U.S. and world carryout numbers go. Then the other thing, which is more fluent, is that what's going to happen with the government as far as policies go. We saw where the U.S. versus the Chinese trade wars are maybe going to get a little bit of recognition and maybe come back. We still got NAFTA, so on and so forth. But I still go and say that the trade fundamentals are still non-bullish, and that the politics is just more or less rhyme and reason to go make the markets bounce and or retreat. However, having said that, I will say that it is a little bit interesting to go and see that for the week so far, and we're not done for the day, that even though we had the USDA report come on out and talk about non-bullish, that we are down roughly around 6 cents in the wheat markets. We're down roughly around 5 cents in the corn, down roughly around 2 cents in the, let me backtrack. Sorry about that. We're down roughly around anywhere from 2 to 6 cents in the wheat. We're down 15 cents in the corn. We're down around 7 cents in beans, down $4 in meal, and down roughly around 40 points in the soybean oil. So once again, we did, however, make new contract lows in the corn, beans, and in the soybean oil this week. But like I said, having this negativism in the marketplace, I didn't think we really beat it up all that much. Then overnight trade, around a little bit of a bounce. We're up roughly around 8 cents in the wheat. We're up around a penny in the corn, $3 or 3 cents in the beans, down $1 in the meal, and up 5 points in the soybean oil. So once again, going forward in here, we're going to get our commitment of traders report coming out after the close today. We think that they built up a big net short position now in the corn. They have been net short the beans. They're still long the meal, have a sizable net short position in the soybean oil, and really lessen their net long position in the soft red winter wheat. Personally, going forward in here, now what's the trade going to go and look at? We're going to go and look at what's going to happen with the weather and our harvest here in the U.S., and or how much farmer sell rate we're going to get on the heels of what we saw from the USDA report. Having said that, it's going to be more or less working our way towards the end of the month when we get our quarterly stocks and a small grains report coming on out, which is going to be more important for the wheat market going forward than it is for the corn and beans. Having said all that also, where are we at after making these new contract lows and seeing the USDA report? Personally, I like to go and think that we want to go and try and sell the market on out. That being, get the trade net short, get the harvest in, see how much farmer sell rate we have, get ourselves competitive versus the rest of the world. Then we're going to go and see where we go going forward from there. What does that mean? Maybe we can push ourselves a little bit underneath $8 in the beans and $3 in the, or roughly around $3.30 in the corn. But then going forward from there, it's going to be more or less, are we competitive? Are we doing business? Our export sales right now, starting out the marketing year, not all that good for corn and beans right now, putrid for wheat. And then what's going to happen with the South American crop going forward? I will leave it at this. Where we are price-wise around the rest of the world, it's not determined production by them. And that's a problem versus us trying to get competitive. Once again, these are my opinions, not that of ADM or ADMIS. Have a good weekend, everyone.